why does that make it extra dangerous, to share a card with someone? A lot of people give their card to their friends and get more money on, they spend more money on their card basically. So how does that tie into this?
So even I'm guilty of one thing I do. Sometimes when I go out for a meal with some friends, there's that awkward moment at the end where everybody's trying to settle up and, some people pay by cash and some people pay by card. I will often put the whole bill on my card and then tell my friends, UPI me $2,000. That's actually quite a good idea because I get extra points for that. And in that scenario, that's not a significant amount of money that would in any way affect my repayment. I'm also getting the reimbursement immediately, so I can definitely make my credit card repayment at the end of the month. As an extension of that, we've started to see a behavior in this country, especially amongst young people, where one guy has a really good card and a good limit, and he almost lends it out to his friends. People borrow space in his credit limit and use his card to fund their own lifestyle and their own purchases. I've seen examples of customers who ended up having 5 or 6 lakh outstanding on a credit card because they helped their friends buy mobile phones. Very, very common phenomenon. He thinks he's being smart because he's making a little bit of extra money.
Points.
Yeah, he gets the points. His friends might pay him a little bit extra as a kind of convenience factor. Some of these guys, the friends, would not be eligible for a credit card.
They have the money, but they're not eligible.
Exactly, exactly. So it kind of sounds like a good idea in principle. There's 2 reasons why it's a bad idea. One is it can really screw up your credit score. Your utilization is going to go up. If you remember, we talked about that. That is not good for your credit score. And of course, the friends could default, right? So you could end up yourself in a default situation through no fault of your own, just because you trusted your friends to keep on top of it. But there's a third and final, more frightening phenomenon that's been happening where the income tax authorities are actually looking into these cases, because if you have a credit card that's regularly showing, 4 lakh, 5 lakh, 6 lakh, but your salary is a fraction of that, it's a very, very suspicious scenario. That's what's actually legally called money laundering. And so you could actually see yourself getting GST notices, tax notices, because it looks like you're running a business through your credit card. So be really careful of that. I think a few $1,000 when you go out for dinner with friends is fine, but letting your friends use your limit to fund their lifestyle is a big no-no.
Lizzie, if you were 25 today with 0 savings, what is the exact 5-step plan you would take to have full financial security in 10 years?
Okay, it's simple, right? Number 1, take control of your budget. Understand exactly what is coming in and what needs to go out every single month. Know it in the back of your head. Number 2, account for any existing liabilities that you have. If you have EMIs outstanding today, make sure you pay them first as soon as your salary comes in. Then, number 3, make sure you are saving. This is a long-term saving plan that you need to set up as early as possible. Even if it's $200 a month, the power of that money early on in your life, compounding, will earn you enormous riches later in life. So start saving, even a tiny amount. And then number 4, make sure a portion of that savings is going towards your contingency fund. This is your rainy day fund. This is maybe 1 to 3 months of monthly spending that you keep in an easily accessible liquid savings account, so that in the worst case, when you may find yourself out of a job, you've always got that backup plan. And then number 5, only once you've done all of those, start to use credit responsibly and build your credit score.
You often talk about a peace of mind fund. What is that and how can I achieve it?
So before you take out any credit, it's really important to know that you have a backup plan. This means a small amount of money saved somewhere easily accessible and in a liquid format, so not a mutual fund, maybe in an FD or something like that, that you can always dip into if the worst case happens. If there's a scenario where you lose your job for a couple of months, you're out of work, or there's a really unexpected expense, maybe a big medical bill in your family, What shouldn't happen is that you start to default on your existing credit commitments. And that's why you need this fund, this sort of backup pool of capital, to give you that buffer and give you that protection so that you never get into financial distress.
Isn't that what your parents are for? I'm just kidding. But no, it's a great thought, but it's going to be so hard for
I know.
anyone